Hello traders, this is Fawad Razak, market analyst for City Index. Today is the 10th of June. So the markets remain in a overall risk-on mode with equity indices, as you can see in this watch list, trading mostly in the positive territory. And as a result of that, we've seen gold prices come back down off their earlier highs, turning flat at the time of recording. In recent times, gold hasn't really moved much, despite the fact that we've seen a big breakout in silver prices, and other precious metals have also rallied, including platinum. But gold hasn't shown that kind of bullish momentum that we've become accustomed to in the last couple of years. Instead, it has been consolidating in a tightish range. But is it possible that we could see gold correct itself now, given that prices remain extremely overbought on the long-term charts? And the fact that equity indices are rallying, reducing the appeal of the safe haven commodity. I think if we start to see the breakdown of a few support levels, then things could get quite interesting for the bears on gold. As things stand, though, all the major support levels are holding firm. So let's see if that changes. Now, the key support level to watch is at around 3,300, this level right here, which was tested yesterday, and it bounced from there. We came close to that level earlier today as well, but once again, gold bounced. However, it has now turned a little bit lower on the session after testing this area of resistance between 33.35 to 33.45. This area, shaded in orange or yellow on the chart, is where gold had previously found support on a couple of occasions last week before that breakdown we saw on Friday. So we are starting to see a couple of lower highs on the daily chart of gold. Nothing too significantly bearish yet, not when you have a bullish trend line still intact. You have the 200-day moving average sloping upwards, but things are slowly starting to look a little bit bearish on gold. However, what is missing so far is some real downside follow through, and that could come in the form of a rally for the dollar, or if we see equity indices continue to surge higher, reducing the appeal of the safe haven commodity. Now, the key support level mentioned earlier at 3,300 is the key level to watch insofar as the short term is concerned. If that level breaks down, then that could pave the way for a potential drop to the trend line, which has been in place since the turn of the year. The trend line comes in at around 3,250, below which we have the round levels like 3,200, 3,100 to watch. But for me, the long-term support level now comes in at around 3,000, which is not only a psychologically important level, but it's also where the last rally we saw in early April started from. So if and when gold gets to that area, we could potentially see the start of the next up leg, but we'll cross that bridge if and when we get there. For now, let's keep a focus on the short-term levels mentioned earlier. In terms of resistance, if we go above this area of resistance, then the next upside target will be the 3,400 level, which has been tested in the last couple of weeks. Most recently, last week, it was tested, and this level held as resistance. If gold were to come back up and retest this level, then on this occasion, we may well see a breakout. But the key area to watch insofar as today's session is concerned is the shaded region, as I mentioned, between 3,335 to 3,345. Now, we've seen a bit of a recovery in all yen crosses as trade uncertainty has eased in the last couple of weeks, including the dollar yen itself, which has formed a couple of higher lows, suggesting that the worst of the selling could potentially be over. Right now, the dollar yen is testing 145 resistance level, which has been tested a couple of times so far, holding below. But the fact that we've created a bit of a bullish structure here with these higher lows, and the fact that price has moved above the 21-day exponential moving average suggests that the trend is no longer as bearish as it was earlier this year, and that we could potentially see a squeeze higher, possibly all the way to the 150 area in the coming weeks. But to get to those levels, we'll need to see further improvement in risk appetite or a string of stronger than expected US economic data. Above 145 resistance, the next level of potential resistance is 146. Then thereafter, there's nothing significant until the shaded red region, where previously the dollar yen had found both support and resistance. And it's where we have the 200-day moving average coming into play between 148.65 to 150, psychologically important area. On the downside, we have 144 as short-term support. Below that, the trend line comes into focus. But the key area of support to watch is between 142 to 142.80. I've shaded this region in gray on the chart. We've seen several bounces from here. For as long as this area remains intact, this will keep the bulls happy. But if in the coming days or weeks we see a break below this area, a decisive break below it this time, that could make things a lot more interesting. For more market updates and insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.